whether it's your first time purchasing a home or you've purchased a home in the past. Let's go over a few things, what to expect throughout the entire process. Step one, once you decide to get back into the market, you're going to need to get a loan approval. Now you can get a loan approval from your bank, you can get a loan approval from a online vendor, or even a broker. So what's the difference? Well, fundamentally, nothing. You're still getting a loan approval. They're getting it through the bank, but there are a few small nuances that you should probably be aware of. Number one, if you go to your bank, there's nothing wrong with that. You have a long-standing relationship with your lending institution. They've got good rates. The person that you speak to at the bank generally is not the individual you're going to deal with throughout the entire loan process. That person is going to be in a call center, and sometimes you can have a little bit of a hard time getting a hold of them, and they don't particularly work certain hours, and then that's it. And they have certain callback times, things like that. Now, you could go with an online lender. You're kind of in the same boat again. With that, my caution would be make sure it's somebody reputable and they have a good close rate, because at the end of the day, the difference is that's a call center. They're getting paid hourly. They're generally not going to get paid a commission, and their salary is not based on their closes. You go to a mortgage broker, and the difference there is a mortgage broker doesn't get paid unless they close the deal. So there's a little bit more motivation there to return phone calls. And I've just found personally and in my career that the lenders that I've used in the past, the broker tended to be a little bit more responsive when it came to solving problems and getting things done. Not that there's anything wrong with anybody else. I've had good luck with them, just I've had better luck with the mortgage brokers that I've partnered with in the past, personally and professionally. So once you upload all your documents and you make that decision, make sure that you compare apples to apples. What I mean by this is make sure that your percentage rate is equal across the board. So sometimes what will happen is you'll get, let's say, a 5% rate. Well, but you pay 2 or 3 points for that 5%. Versus somebody else gives you just, here's your rate and here are your options. You can take the rate as it stands, or if you pay 1, 2, or 3 points, this is where you can buy down your interest rate. So basically what's happening is you're paying for some interest up front at a slightly discounted rate, which helps your overall interest for the long term. So in that scenario, what you've got to do is make sure that you do the math on how long you intend in staying in the property to make sure you get your money back in that scenario. Now, once that's all said and done, they're going to issue you your pre-approval letter. So you're going to need that to submit offers on properties. It shows more good faith that you've at least taken the next step, you're a qualified buyer, and you're serious about the property. All right, so you found the house that you want to put an offer in on. You and your realtor have made a strategy as to the offer process. Hopefully your realtor has reached out to the listing agent, discussed some of the particulars and really what that seller is looking for as far as terms. Sometimes sellers want things like a lease back, or they need 45 days or 50 days to close a property, or it's going to be contingent on the sale of another property, things of that nature, or closing on the purchase of another property. So it's good to get an idea, and if those things are amicable to you, why not put them in the offer up front and hopefully make yours stand out. So once you craft your offer, you're going to take a look at your inspection period. How long do you want that to be? That's the time where you have to look at insurance. You get your home inspection done, and I highly recommend you do that on every property, no matter what. I know people want to save some money, but sometimes it's just not worth it to not get that home inspected, and then you move in and find things. No home is perfect, even new construction, it's not perfect. And you also want to discuss how much of a security deposit you're going to put down. That's part of, it's going to go towards your closing costs and fees. But it can make your offer a little bit stronger if you're putting a larger amount of money down. So 3 things could happen when it comes to your offer. Number 1, it's either accepted right away, Number two, they counter offer, and that is where the seller goes, hey, you know, I don't like these particular terms. What about this? What about that? You can go back and forth with your realtors, and if you come to an agreement, now you're under contract. Or the third is they just flat out say, nope, not interested. They're not going to budge from what they've presented online, straightforward, and that is what it is. So those are your three things that could happen when you're making your offer. So after your offer is accepted, your home inspection is going to get scheduled. Within that inspection period, you're going to review the findings of your home inspection. You're also most likely, depending on the property, going to need a 4-point and a wind inspection. Condos typically don't need that wind inspection simply because the condo takes care of that. Some townhouses do the same thing, but case by case, just kind of plan on needing that 4-point and wind, and that's very specific to Florida. That's a Florida thing. Those are insurance inspections. And completely separate from your actual home inspection. So don't use the 4-point as a inspection. So your inspection is going to look at everything that's visible. You know, they're not, you know, tearing walls down and looking into things, but, and using x-rays and such, but they're going to see what's visible and they're going to point it out to you so you can make a decision. Now, you could have things repaired, ask to have things repaired by the seller, or you could have the seller offer you a concession perhaps towards closing costs and fees. It just depends on how we structure the deal and what's wrong. So the other thing you're going to want to really, really, really look at is insurance. Everybody knows insurance is going through the roof. Florida is not immune to it. When you are looking for homes, just remember to bump up your insurance estimation by a little bit. And then when we get you under contract, we'll get you an insurance quote. You can always shop around more, but at least get a quote so that you know what, you know, the price is. So you can put that into your budget and know what it's going to be, you know, for your monthly payment to make sure you can afford everything. Once the appraisal is finished and back to the lender, that's your next milestone. And the reason that is you want the house to appraise for the offer. And the bank's going to need to see that. They want to know that, let's say you made a $500,000 offer. They want to make sure that the home is worth at least $500,000. And if it's not, what you do is you go back and you negotiate with the seller again, saying, hey, you know, the appraisal came in low, and you try to come to an agreement. So let's say everything's buttoned up, the house appraised fine, everything is going good. You've gotten your insurance, you've bound your insurance, meaning you paid, and our next steps would be to schedule your final walkthrough and schedule your closing date and time. So your final walkthrough is your chance right before closing to walk through the house one final time and make sure everything that was promised to you has been delivered. If you had things that were repaired, those items were repaired. If furniture was supposed to be moved out, there's no furniture left behind. Now, you go to closing, but before you get there, you're going to get what's called a HUD statement. And that is a document that breaks down line by line all of your expenses for both parties, back and forth from the seller side and the buyer side. And it's going to give you a bottom line of how much the lender is supposed to send to the title company for your loan, and it's also going to tell you how much you need to wire in for your final security deposit. So let's take a conventional loan that's an 80-20 as an example, and you put down 5% to hold the property. So you're going to owe another 15%, and you're going to have to wire that money in cash. That's not part of the loan because you're only going to borrow 80%. So you're going to go to closing, bring your ID, warm up your hand, get ready to sign a whole bunch of documents, and that's it. You're good to go, and you are a homeowner. So if you have any questions, please feel free to shoot me an email, give me a call. Love to chat. Jump on my calendar. And if you like this kind of content, please hit that like button, and I'll see you on the next one.